Managing money digitally across multiple financial institutions has become an everyday part of modern personal finance, but it also introduces unique security challenges that require strict institutional controls. When moving funds between an online banking platform like Vio Bank and an external bank account at another institution, the verification process is a critical layer of protection rather than an arbitrary hurdle. Understanding the mechanics and legal framework behind these requirements reveals why confirming external accounts is an absolute necessity for modern banking safety. At its core, the primary driver for verifying external accounts is fraud prevention and risk mitigation. Financial institutions operate within a complex network of electronic payments, primarily the automated clearinghouse network, which processes millions of transactions daily. If a malicious actor manages to obtain your login credentials, they could theoretically attempt to link an unauthorized external bank account to siphon out your savings. By requiring a strict verification procedure, such as microdeposits where specific amounts must be confirmed, Vio Bank ensures that the person initiating the link actually has direct, authenticated access to the receiving or funding account. This cryptographic and transactional proof acts as a vital firewall against unauthorized money movement. Beyond internal security protocols, banks are bound by rigorous federal regulations designed to maintain the integrity of the broader financial ecosystem. Laws such as the USA Patriot Act and regulations enforced by governing bodies like NACHA mandate that financial institutions implement strict customer due diligence and anti-money laundering frameworks. These rules require banks to know precisely who is moving money, where funds are originating, and where they are terminating. Unverified external routing could easily become a loophole for illicit financial activities, meaning robust verification is a non-negotiable compliance requirement for Vio Bank to operate legally and transparently within the United States banking sector. The verification process also serves to protect account holders from simple human error and operational friction. Entering a long string of routing and account numbers manually leaves plenty of room for typos. If a single digit is misplaced, an unverified transfer could result in funds being misdirected to an inactive account, an unintended recipient, or triggering costly ACH return fees and processing delays. By enforcing validation steps prior to completing major transfers, Vio Bank ensures that the payment path is entirely clear, active, and verified, reducing the likelihood of frozen assets or lost capital. Ultimately, the requirement to verify external accounts creates a circle of trust between the account holder and the financial institution. While waiting a couple of business days for test deposits to clear or authentication steps to finalize can occasionally feel tedious, these safeguards form an essential barrier against sophisticated cyber threats and regulatory penalties. Every layer of verification reinforces the security of digital banking, ensuring that hard-earned money remains firmly under the control of its rightful owner.